Today, we're going to talk about the importance of budgeting for your small business and the benefits of effective budgeting. Let's talk about some of the key components of a budget. And I want to break down some of the industry language that you may come across on some of the forms or documentation, maybe even in your accounting software. But I want to make sure that it's simplified enough that you're not intimidated by these words when you come across them. Something like revenue projections, which is simply you determining or estimating or guesstimating how much revenue you expect to make in your business over a period of time. Expense forecasting is another one. Just another fancy word for determining how much money you plan on spending over the course of that time. What type of equipment do you need to purchase? What type of software do you need to invest in? Forecasting the expenses that you may need to spend in the course of your daily business operations. And cash flow management. Again, a fancy word for determining how your cash is going to flow, how your cash is going to move throughout your business, throughout the course of your operations. Every dollar needs a destination. When you're figuring out your budget, you want to make sure that as that income comes in, that you have already predetermined what you're going to spend that money on. Let's talk about setting some financial goals, short-term and long-term goals. You always want to break them down in those two buckets. Short-term, meaning 12 months or less, or long-term, 12 months or more. Over the course of that period of determining your short-term and your long-term goals, you want to go ahead and make sure that those goals are SMART, just like you and just like your phone. SMART goals. But when it comes to budgeting and we think about SMART goals, we want to make sure they're specific, they're measurable, they're attainable, they're relevant, and they're time bound. When you're going through the process of setting your financial goals and you've identified your SMART goals, you want to take it a step further and make sure that you align those SMART goals with your business objectives. The next step is to make sure that you develop a budgeting process. Make sure that you go ahead and gather all of the critical data and financial documentation that you need to pull this budget together. And then you want to go ahead and break down those expenses. Make sure that you understand and know the difference between your fixed cost and variable cost. Your fixed costs or your fixed expenses are the ones that are the same every month, like your cell phone bill or your rent or your lease payment. Those bills are ones that will be the same every month. You also want to look at your variable bills, making sure that you estimate your expenses. Does it fluctuate? And if it does fluctuate, you want to document that so that you can ultimately align that income with your expenses and make sure that your cash flow is consistent. When it comes to creating a budget and you sat down, you've determined your income, your expenses, you've created your SMART goals, you've allocated and you've given every dollar their destination. One of the tools that I often recommend for my clients is an online banking tool called NOVO. This banking tool is perfect for busy small business owners who don't have time to continuously sit down and move money around. It allows you to direct all of your income into this particular online banking solution, and then you're able to preset your percentages so that you can send a portion of every dollar that you make into your operating account, for instance, to manage your daily business operations. You can set or preset a certain percentage to go into your payroll account or account to pay salaries or independent contractors. And then you can also set or preset a certain amount to go into a tax account to make sure that you have the money set aside for your estimated taxes. Be sure to check the link in the description box to check out this online banking solution that will help make budgeting a breeze for you and your small business. Once you set your budget in place, you want to make sure that you can monitor it and control it on a regular and ongoing basis. Listen, a budget is not a set it and forget it situation. You have to revisit it on a monthly and recurring cycle. So you want to make sure that you sit down and those preset allocations that you've put in place, those SMART goals that you've already predetermined that you want to achieve, you want to make sure that you're watching the income as it's coming in. You're watching your expenses as they're flowing out and making sure that they're doing exactly what it is you intended and you set out for them to do when you created this budget. When it comes to tools and resources for your small business, when it comes to budgeting, I just gave you a spoiler alert on the online banking solution NOVO. However, keep in mind that your accounting software is your best friend in this whole process. When you're working with a bookkeeper, or whether you're DIYing it and you're tracking your income and expenses in your accounting software on a regular and consistent basis, you've already set yourself up for success in achieving the budget that's gonna have a positive impact on your bottom line. So we've spent a considerable amount of time talking about the importance of budgeting, the benefits of budgeting, what a budget actually is, how to develop some SMART goals, how to define your budget, how to make sure that you understand and know your fixed and your variable costs, how to make sure that you create the budget that works best for you, and steps to monitor and control your cash flow as it's coming into your business. Ultimately, this is all gonna benefit you in the long run. It's gonna help you make better financial decisions so that you can fast track the growth of your business, so that you can grow and scale your small business. We all know and we've heard that one of the main reasons that small businesses fail is because of poor cash flow management. Armed with this information, it's important that you make sure that you take control of your finances, that you go ahead and create a budget that's going to work best for you and keep your small business in business